If Bitcoin goes from 100,000 to 250,000, we're all like, oh, find me a better asset. Who the fuck are you to say that somebody with $1 million is more responsible over their money, or is smarter, or is more able, or still wants to lose all of their money? And people have got to stop thinking about the cycle. The cycle, the cycle, the cycle. Well, for this asset to get from 2 trillion to 10 trillion, you need a ton of money. It kind of has to have adoption by major people at this stage. These things are incredible wealth generating machines.
The banana zone is here, and many are anticipating the bullish momentum for Bitcoin and crypto as 2024 comes to a close. As this momentum is building, the institutions are quietly positioning themselves, and Raoul says everything is about to change. Bitcoin is sitting just above 94,500, up over 4% in the last month. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul says that he's remaining bullish on digital assets. The former Goldman Sachs executive gives a portfolio update. He says the next phase of the crypto cycle is critical, and why in 2025 we'll see massive capital pouring into the space. With major pension funds and institutional investors on board for the coming cycle, Raoul predicts that crypto is on track to be a $10 trillion digital asset class. Powell says that this cycle will separate itself from its predecessors, as devalued fiat currencies will push more adoption into the crypto market and bring in more capital than we've ever seen before.
Normally what happens at this phase is we should rally into year end pretty strongly in everything. But then the real game gets played in first quarter. Let's look at the last Trump administration. So from September to the end of the year, the dollar rallied. September, the end of the year, rates went up. Same narrative. It was all about tariffs and, what's he going to do and how's it going to play out? Almost exactly as the year turned, the dollar went lower and rates went lower. So I've been producing a chart showing that global liquidity tightened and it has a 10-week lead time. And that should mean that at the end of the year, we get a correction. Now, that would not be surprising. Let's say Bitcoin gets to 120, it corrects back down to 100. I mean, that's just normal course of business. But Twitter being Twitter is losing its mind over this correction. I get messages, is this the one? I'm like, calm down. You should be expecting at least another 4 or 5 of these over the course of the next year. They're just regular, but for some reason that people are losing their minds. But once that's out of the way, usually it should be good. Now, liquidity needs to come back, so we need to see the dollar weaken. We need to see rates come down somewhat. Those are key things for us. When you look at the crypto Twitter, virtually nobody actually owns Bitcoin. People have some, their savings, but what they actually own is everything else. Because nowadays, if Bitcoin goes from 100,000 to 250,000, we're all like, oh, find me a better asset. I'm like, I mean, for normal people, another thing when you zoom out is people are like, the institutions are coming and corporations are coming and governments are coming. Well, for this asset to get from 2 trillion to 10 trillion, you need a ton of money. It kind of has to have adoption by major people at this stage, because there's no way retail can drive Bitcoin from 2 trillion to 10 trillion. So it is the adoption wave. We were just lucky because this is the first asset known to humanity where retail were first. There is an enormous amount of speculative risk taking, but this is, and I've said this for a very long time now, is the greatest macro opportunity of all time. Yes, you can be ultra safe and just own Bitcoin and you'll do very well indeed. Or you can try and figure out how to make more money because really, you got a tailwind. Everything goes up. When the music stops, a lot of this stuff goes to zero. But I don't blame people for playing the game. And the game of the biggest mid stuff, okay, that's a very big game indeed. The when Ethereum started, or Solana, or Sui, or Apps, or whatever it is, right? These things are incredible wealth generating machines.
Raoul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. Liquidity drives everything, and crypto will be the best performing asset of them all. Raoul has been stressing to investors for months that all the factors are beginning to align right now. We're in the banana zone, a period characterized by parabolic moves upwards in crypto prices.
Yeah, I mean, how I'm dealing with this mentally is somewhere in the first quarter, assuming that it's a crazy alt season, I will take a bunch of chips off, call it 20%. And that I will do to sort out stuff that I want to sort out in my life, lifestyle chip stuff.
Yeah.
And then you're de-risked. So nothing really matters after that. Then it's like, okay, let's ride the cycle, see how it goes. And that's going to be, okay, do I take some more off because I want to buy a house in Spain, or I want to do XYZ or whatever, right? Fine. Would you put some in stable coins a little bit, or, put it in traditional markets so you've just got a plan B? Yes, everybody should do that if that's what you want to do. If it then goes to la la land, yeah, you might take some more off, or you just ride the bloody cycle and forget about it. I mean, I was at a friend of mine's house for dinner in Palo Alto. He bought, I can't mention his name. He bought Bitcoin at $3, $2 million of it. So that's a $66 billion trade. Now, he will have taken money off en route just to pay for lifestyle chips, but whatever he's worth, 5 billion, 10 billion, 20, nobody knows, nobody cares. He didn't trade ever. He didn't go, oh, the cycle, I must sell out at the top and buy the bottom. He took some money off the table. Let's say you take 10% off and say, well, that cover my cost of living each year. You can take 10% off each year, and because of the compounding gains of 100% plus, you're going to make an utter fortune. Remember, most of this space goes down 99% every 4 years, and the chances are you will go down 99% too, unless you just don't f this up. There's an interesting structure to markets, is there are more VCs and airdrops than there are secondary professional pools of capital in crypto. Call them hedge funds. It's quite funny because everyone's like, those bad VCs, they get tokens early, they dump them. What's happening with Pengu today? Everyone's taking their cash machine and selling it immediately. So why there is the big fall is there's not enough secondary buyers because it's retail. The hedge fund industry, which, I've got this asset manager, Xpan, which invests in crypto hedge funds. There's not that many that are of any size. And the total size of that industry is maybe today is maybe $10 billion. The traditional hedge fund industry, $4 trillion. So what happens is the VCs exit, think of that as an IPO, early IPO, and there's not enough asset managers to buy it. So prices fall 80%, 70% before they clear. And then these guys do their homework and say, what do they want to own here? Do I want to own Aptos when it comes out and dumps, or Sui when it comes out and dumps, or Monad when it comes out and dumps? Retail could play that game, but they tend not to because the retail are always the IPO buyers. Oh my God, Pengu's out today, I must buy it. Smash. But I think it's just a structure of markets thing. So I don't think we need retail. I think we need more institutional money into the hedge funds and the professional trading to have professional capital, lower the volatility, and make the space a little more functionable.
Embracing an unyielding enthusiasm for the Bitcoin realm, Raoul confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Raoul reassures that a long-expected surge awaits as we head into 2025. Powell's analysis brings attention to the liquidity cycle as a valuable indicator for understanding debasement, signifying a shift in the market's direction. He identifies a crucial turning point in June, where his weekly liquidity index hit its lowest mark. This prompted him to focus on purchasing Ethereum. Powell also acknowledges the divergence between liquidity and asset prices, emphasizing that during bull cycles driven by adoption and speculation, cryptocurrencies tend to outperform liquidity measures. Based on his findings, Raoul Pal strongly advocates for the strategic investment in cryptocurrencies, specifically highlighting Bitcoin and Ether as promising assets. He sees them as assets that surpass the performance of traditional financial institutions' balance sheets and provide a means of protection against currency debasement and the inherent flaws of the current financial system. What is your opinion on Raoul Pal's claim that investing in cryptocurrencies like Bitcoin and Ether serves as a smart hedge against currency debasement? Let us know in the comments below.